Hi, thank you for allowing myself and Junior Achievement into your classroom today. Junior Achievement is a nonprofit national organization that helps youth understand finances, entrepreneurship, and work readiness. My name is Myra Lucia. I'm a branch manager with CUA, and I have 25 years in the financial industry. Today, we're going to talk about credit scores, credit reports, and how they fit into good financial health. We hear a lot about credit scores, but what are they? How do we develop a credit score? And how do we make sure we have a good credit score? Credit score is a number. It's really an indicator of how you manage your current debt and payments. Lenders, which can include lenders of any kind, banks, credit unions, credit card companies, even cell phone companies and landlords, use your credit score to help judge how you will repay your debt to them. Your credit score is developed through a number of factors. So how much credit you have available to you, how much of that you use, the different types of credit you have, even how long you've had a credit history, all play a part in building your credit score. Credit scores range from 300 to 900. I have to admit, I always thought 900 was the absolute top limit. However, in my 25-year career, it was 2 years ago, and I saw a client with a score above 900. I never thought it was possible, and in 25 years, I've only seen it once. Credit scores under 580 are considered poor credit scores. From 580 to about 625 is considered fair. Would we lend to you? Possibly. But we would sit down and talk to you about what you've been doing with your credit in the past. We might need a guarantee, like a cosigner, or to take security. For example, if it was a car loan, we would take security over the loan so that if you didn't pay, we would be able to repossess the vehicle and sell it to pay back the loan. From 625 to about 700, your credit score is considered good. 700 and above, it's very good. And of course, the higher the credit score, the better the banks and other lenders feel you are credit worthy or financially responsible. The better your credit score, the better you're able to negotiate the terms of your borrowing. So for example, you could get a better interest rate. You could get more money. You could get other benefits because you've proven yourself to be financially responsible already. With a poor credit score, again, going back to the example of the car loan, lenders would most likely take security over the vehicle. Somebody with a high credit score looking for the same type of loan may not need to have the security of the vehicle. You would just have a loan that is considered unsecured. Because of your financial responsibility or proven financial health, we don't feel, or lenders don't feel, that they need that extra security. The interest rate is part of how a lender determines or mitigates the risk that they are taking in lending the money to you. So if your credit score is low, expect your interest rate to be higher. That means that more of the loan is paid if you were to default or stop paying that loan in the future. So a credit score is really an indicator of your financial health at the time. A credit report is your full credit history. It includes information such as any other names you have used. So for example, going from a maiden name to a married name or back again, as some people have to do. Any other addresses you may have had, past employment is included, as well as any credit that you have had. It tells us, for example, how long of a credit history you've had. For example, somebody who is 21 years old and they're coming in applying for their first credit card. They may not have a credit history because they've never had credit before. That is fairly normal. For somebody who is 50 years old and doesn't have a credit history, that tells lenders that they need to ask more questions. It's highly unlikely that this person has never had a cell phone, has never had a credit card, has never had a loan. So we would need to ask questions. Why is there nothing showing? That actually is a bit of a risk indicator for lenders. But like I said, if you're younger, it isn't a risk necessarily. In Canada, there are two credit reporting agencies. One is called Equifax, the other one is called TransUnion. You can get your credit reports from either of those companies. They do carry the same information. Your credit score may vary slightly between the two companies. They do calculate the credit scores slightly differently. We do often see a difference of 10 to 20 points between the two companies. But that really isn't that much of a concern if your credit score is good to begin with. You can check your credit scores whenever you wish. You can go to those companies, Equifax or TransUnion, directly. There are also companies like Credit Karma that allow you to check your credit score. These days, many banks offer that same service directly through their online banking website. It doesn't hurt to check your credit score from time to time. Years ago, any time that your credit score was checked, it used to lower your credit score because that was considered an inquiry. And the only time that an inquiry used to be done was by a lender. So the more times that you had lenders check your credit score, it would lower your credit score. Things have changed. People want to know about their credit scores and will check them more regularly. As well, when you go to purchase a vehicle, that car dealership can ask various banks to do the financing for your car loan. So more inquiries will be done. Equifax and TransUnion have understood that. So checking your credit score does not affect your credit score like it used to. You can check your credit score whenever you wish without an impact to your overall credit score. We strongly suggest that you do check your credit score from time to time, at least once a year, if not twice a year. In doing that, you can see if there are changes to your credit score. If you're paying your bills on time and you know that your credit score when you started was, say, for example, 720. In 6 months, you've been doing all of the exact same things. You expect your credit score to be around 720. If you check it and it's all of a sudden 600, you know something is wrong and you should investigate. So you would want to contact that credit company, whether it's TransUnion or Equifax, to get your full report and see, is there a bill you didn't know about or forgot about? Is there inquiries that you did not ask for? Is there the potential for identity fraud? Your credit score dropping can be an indicator of any of those things. So if you do see a drop when you're checking it regularly, you should act on it as quickly as possible. Keep in mind, as students, you would not have a credit score as of yet. In Canada, most provinces, you cannot have a credit score until you turn 19 because you cannot legally be bound to a contract or do lending, because that is a contract, until you're 19, the age of majority. And that is when your credit score and your credit history would start. So when we're looking at credit histories, we would also look to see how long you have been on the credit bureau. That tells us if you started credit early in your life or a little bit later in your life. To build good credit, you want to make wise decisions. Make sure that you don't borrow more than you can repay. Make sure that you're paying your bills on time. So by the due date, if you can pay them in full, all the better. But at the very least, pay your minimum payment on time. I have had clients who have had poor credit scores, and when I ask, you didn't pay this credit card, yet you've paid everything else, they will tell me, well, it only asked for $10. I didn't think it would matter. It does matter. The terms of your agreement for that credit card is to pay the minimum payment by the due date. Because that client didn't do that on one credit card, whereas they did with their 5 other lending products, it gave them a very poor credit score. So you need to make sure that you are paying all of your commitments on time and as agreed. You want to have a variety of credit products as well. Loans work differently from credit cards. If you have a credit card and a loan, when it's appropriate, that helps your credit score as well. But you want to make sure that you're making those decisions wisely and that you are using those products wisely. My best piece of advice when it comes to establishing your credit is, as soon as you turn 19, go get that credit card. Ask for the minimum limit that you can have on it. And when you get the credit card, put your cell phone bill on it. You know you're paying your cell phone bill anyway, each and every month. It's just going to be charged to your credit card, and you pay your credit card instead of directly to the company. Then put the credit card away. This establishes use of the credit card on a monthly basis. It's a bill you know you can pay and that you do consistently pay. So there's no change to your actual budget. Going forward as well, if the card is actually put away and you're not tempted to use it, you won't overspend on it. That's going to establish a really good credit history, a really good credit score. So if you can be disciplined and use wisely, make wise decisions, you will have a great credit score moving forward. It is really important to speak with somebody that you trust and somebody that is an expert when it comes to establishing your credit and having any lending products. You may go into a bank asking for a loan, but that might not be your best option. Speak to your banker or your lender and discuss what it is you actually want to accomplish, not just what you think you need. Your banker or lender is your expert in that field, so give them the information to give you the right advice. A poor credit score can take years to repair. And even cell phone companies report to the credit bureau agencies. And a lot of times that is where we see poor financial decisions. For whatever reason, a lot of people miss payments on their cell phone accounts. This does affect your credit score. So make sure that you are making all of those payments on time and that you're using a plan that is within your budget. Junior Achievement has additional financial literacy and information on credit scores and credit reports at jacampus.org. I hope that you'll find them helpful. Thank you so much for listening. Have a great day.